All right, I see a note that says we are now broadcasting to all viewers. So welcome. Thank you for joining us. I'm Deb Newman, president of the Bangor Region Chamber of Commerce, here with Shelley Sund, who is our director of marketing and events. Shelley is our Zoom producer extraordinaire. We're grateful for that, I'll tell you. And we're also grateful to Eaton Peabody and Jack Bjorn, who's joining us. Jack is an associate with Eaton in the Portland, Maine office, specializing in employee benefits, and all sorts of other legal expertise. And we're here to talk about the PPP program, the Paycheck Protection Program. And Jack, you joined us about, maybe a month ago, 3 weeks ago, when the program was really just starting to roll out. People were applying for it. There was a lot of activity. Businesses are continuing to apply for paycheck protection, and now many businesses in Maine have successfully received funding through that program and have a lot of questions about implementation and making sure that they're meeting all of the requirements, especially as businesses start to slowly reopen and bring employees back. Mm-hmm. So we've had a lot of questions about PPP, and we thought it would be great to bring you back to help us answer those. So we appreciate you, Nate Levesque, who helped organize this. And we'll turn it over to you. Before we do that, let me let everybody know that we are taking your questions. So you can ask a question in the chat if you're on Zoom. I know Shelley's getting us up on Facebook Live. Assuming we're able to do that, you can also comment in the Facebook.
We are on Facebook Live, and they can go right through the Q&A on Zoom.
Okay, perfect. And Shelley will be capturing your questions, and she'll share those with me, and I'll share those with Jack. So Jack, I know you have a presentation to kick us off, so we'll turn it over to you, and thank you again.
No, thank you, Deb, and thank you, Shelley, for putting this on. Thanks to Nate also for organizing this. As Deb said, the Paycheck Protection Program, part of the CARES Act, started what seems like only a few days ago, but it's been a little over a month and a half now. And there are definitely a lot of questions that we've been able to answer in the last few weeks as the SBA and the Treasury Department has put out a series of interim final rules and FAQs, but there are certainly still some questions remaining too, especially as we look forward to the next week or two where we might have another bill passed in Congress. So with that being said, I'm just going to go through a quick review of the Paycheck Protection Program for those that might still be applying. I'll try to keep that brief and certainly can share the slides after I'm done, and then we can get into the new developments and clarifications as they've come up and answer any questions thereafter. So if you give me just a second while I share my screen. There, can everybody see this screen? Awesome. All right, let me just.
Yeah, looks good. Looks good.
All right. I got to, how do I? Oh. All right, so there we go. So as I said, just a quick review. Within the CARES Act, there were a number of different programs for businesses and individuals alike to help people during this pandemic. The Paycheck Protection Program is one of the biggest programs and originally designated about $350 billion in federally guaranteed loans to qualifying businesses. Since the CARES Act was enacted, an additional $310 billion has been allocated to the program. The program can be used for loans that can be forgiven and used to maintain payroll through June, and those loan amounts can be used also for mortgage interest, rent payments, utility payments, etc. Eligible businesses. So generally speaking, the Paycheck Protection Program offers loans to small businesses with fewer than 500 employees, certain 501c3 nonprofits, some veterans organizations, tribal organizations, and as the SBA has clarified, since the act passed, farming and agricultural businesses as well. I know when this all started, there was an issue of the delayed time for self-employed and sole proprietors to apply, but they are now available to apply as well. Some special notes, the businesses, even without a personal guarantee or collateral, can get a loan so long as they were operational on February 15th of this year. That means they were in legal existence and were paying salaries or payroll taxes to employees. The 500 employee rule is determined on physical location of the business, and for businesses in the food service and accommodations industry, that can be per location. So for hotels, for example, each hotel, if they have less than 500 employees, would be able to apply. So ineligible businesses and individuals, for those that are engaged in illegal activity, that are household employers, that are 20% or more owner of a business and subject to some sort of criminal confinement or other charges, or are otherwise controlled by you or the business, and that has been delinquent or defaulted on a loan in the last 7 years, all of those categories of individuals or businesses are ineligible to apply for a loan. The affiliation rules, SBA loans are generally subject to the affiliation rules, but as I said, during this 8-week period following loan origination, the affiliation rules do not apply to the NAICS Code 72 businesses, franchises, which I'll get to later in the slideshow as well, and other SBA licensed privately owned investment companies. The general terms of the loan, you can get 2.5 times the payroll costs, not to exceed $10 million at an interest rate of 1%. A lot of people have referred to this loan as a quote unquote grant, because if used properly, the loan is entirely forgiven. For expenses that are not forgiven, those are at the 1% interest rate. And in addition to payroll, the loan proceeds can be used to maintain or make mortgage interest payments, lease payments, and utility payments on obligations that were in place prior to or on February 15th of this year. So I'll skip through this slide and just move on to the payroll costs. Payroll costs include salaries, wages, commissions, or similar compensation, benefits, group health benefits, payment of any retirement benefits, and payment of local or state taxes assessed on the compensation of employees. The employer side, however, is not included in the payroll tax. The sum total of the cash compensation is limited to $100,000 per year for any employee. That's prorated down for the 8-week period. And for sole proprietors and independent contractors, the same applies. Again, not income of any more than $100,000. I guess importantly, and this is something that the SBA has clarified since the time of the act, but the payroll costs that are excluded are compensation to non-US residents. So in Northern Maine, for example, there may be employees that are living in Canada, and those employees would be excluded for purposes of the payroll compensation. Again, I'll get to that because there's been some developments there as well. So for loan forgiveness, which is, I think, the biggest thing on everybody's mind at this point, businesses that have used the loans for the eligible purposes under the Act and under the recent guidance are eligible to have the loan entirely forgiven. Importantly, if there's any portion of the loan that's not forgiven, again, that's at 1% interest for the 2-year period, but there's no prepayment penalty on that as well. So if you reach the end of your covered period and you haven't been able to use all of those funds, you can pay that additional amount back at the 1% interest with no prepayment penalty. What if the employers bring back employees or restore wages? I know this is a question that we've gotten a lot of questions about. So if you have a reduction in employment or wages that occurred between February 15th of this year and April 26th of this year, you can still receive full forgiveness if you eliminate that reduction in employees, you bring back those employees, or you increase wages back to their normal level by June 30th of this year. On the wages side of things, so long as you don't have a reduction in salary for any employee that's less than or that's more than 25%, then you're in the clear. Here's just a quick example. And then the application. So importantly, like a lot of this is done through the lender. You can work with your lender. It's important to speak with them as soon as possible. The funds are first come, first served, but there appears to be still plenty of funds left at this point. I think there's roughly 200 billion remaining in the PPP program in the quote unquote second round. So that is still plenty available for any businesses or individuals in need. Importantly, when you're applying or when you did apply, you had to certify to a number of different things. Two of the most important certifications that you had to have made that come back later as we get into the new guidance. One is that the uncertainty of the current economic conditions made it necessary to request a loan to support the ongoing business operations. And two, you also affirmed or are affirming that the loan money will be used to retain workers or for other eligible purposes. And I'll come back to that in a moment. As I said, there have been a lot of new developments and clarifications. And while some of those new developments and clarifications have not been entirely clear themselves, the SBA has continually updated its FAQs and continually published some final interim rules, sometimes conflicting with other guidance that's been out there, but every day, every week, we're getting new guidance, which has been helpful in interpreting all of this. So to start out, the PPP loans can cover paid sick leave, but if you use those funds to cover paid sick leave, then you are ineligible for the tax credit under the CARES Act, for the employer retention tax credit. Payroll costs don't include the employer share of taxes on those payroll costs, and the 8-week covered period starts when the funds are dispersed, which under the Act and under the most recent guidance, that is no later than 10 days following loan approval. There's some time built in there because the lenders need time to receive the funds from the SBA once they've submitted the application, but then you have to start using those funds in order to receive forgiveness anyways within those 10 days. So, and this is, again, I'll stress that some things that the SBA has published are still conflicting with other things that the SBA has published. One of those is this franchise entity or business group, corporate group guidance. But so far, the SBA has said that there's a $10 million cap for each franchise entity, and each franchisee within that franchise entity is limited to one loan. So in the aggregate, it would be $10 million. E-scanning and e-signing is perfectly okay. Given the circumstances, a lot of people aren't allowed to leave their homes. Banks may be closed to walk-in customers, so e-signing and e-scanning is okay. Lenders may sell the loans into the secondary market at some point later, especially if the loans are in fact loans and not just redeemed or as grants. And then housing stipends and allowances count towards the 100K compensation limit. So for purposes of loan forgiveness, there was a safe harbor rule, and I know we're a couple of days past the safe harbor deadline. But as I said before, individuals or businesses were required to have a good faith certification of economic need when they are applying. The safe harbor allowed those individuals, those applicants, to return loan proceeds by May 18th if they had sufficient access to other liquidity that they would be able to use to cover the business expenses. If the loan was returned under the safe harbor, then you'd still be eligible for the retention tax credit. That's one important thing. And there would be an automatic review of loans over $2 million, which is on the loan forgiveness application, and other review of other loans as appropriate. The SBA has said in the FAQs that any borrower, together with its affiliates that receive PPP loans with an original principal amount of less than $2 million, which is most individuals in the state of Maine, will be deemed to have made this required certification concerning the necessity of the loan in good faith. So that is good news for most of the Maine applicants, if not all. The forgiveness is not reduced if the employee is laid off. Excuse me, that should say the forgiveness is not reduced if the employee was laid off and received a written offer to rehire, the employee was fired for cause, the employee voluntarily resigned, or the employee voluntarily requested reduction in hours. So originally, given the FTE or the full-time equivalent calculation, there wasn't an added category for individuals who are fired or let go or resigned during this. And so those amounts of the loan would not be eligible for forgiveness, but the SBA has come back to say, to no fault of the business itself, and because of that, the businesses would still be eligible for the loan forgiveness. Additionally, hedge funds and private equity firms are not eligible to participate. Hospitals owned by government entities that are owned in some capacity but receive less than 50% of funding from government sources are eligible to receive PPP funds. And if the applicant is a debtor in bankruptcy, either at the time of the application or any time before the loan is dispersed, they will not be eligible. I know there has been quite a bit of discussion in this area and some news articles recently about certain debtors in bankruptcy that are petitioning the SBA to receive funds. But as far as I know right now, there's no final guidance on that other than what the SBA has already published. All right, hold on just one second. Slideshow, there we go. So student workers, when you're calculating the total number of employees, do count in determining the loan eligibility, except for when the applicant is an institution of higher education as defined under the statute and the services are performed as part of a federal work study program. So if you have a student worker who is working in a coffee shop, for example, that student worker might be eligible to be included as part of the total number of employees. But if that student is working for a college or university as part of a federal work study program, they would not be included in that 500 cap. And this next bullet point goes back to the franchisee question, I guess, from just a minute ago. But a single corporate group may not or may only receive up to $20 million. And a corporate group is a group of businesses owned by a common parent. So if you have a number of businesses or entities that are owned by one business or entity, that whole group can only receive up to $20 million. This isn't entirely clear given the $10 million franchise announcement, but my expectation would be to just leave the franchise as it is with the $10 million and any other larger corporate groups at the $20 million. Loan increases. This is a big one, especially for many small businesses in Maine, seasonal businesses at that, who are coming up on this summer season where they might have otherwise been busiest. Partners in partnerships and seasonal businesses using the new May 1st to September 15th, 2019 calculation may receive additional PPP funds. This is an exception to the otherwise one-time disbursement rule. and lenders must submit the form 1502 within 20 days after the loan is approved, or by May 22nd for old loans, pre-existing loans, before this was announced. Excuse me. Loans cannot be increased past the $10 million amount for individuals, those franchise groups, or the $20 million for corporate groups. 501c12 electric cooperatives are now eligible for the program. And then going back to the foreign entities or individuals that are living outside of the US, announcement that employees of foreign affiliates are included for purposes of determining whether the borrower has more than 500 employees, which is different than what the SBA originally said, except in limited circumstances where the affiliation rules expressly do not apply. So here, the SBA will not find any borrower that applied prior to May 5th, which is most borrowers at this point, to be ineligible based on the borrower's exclusion of non-US employees from the total headcount of employees, if that borrower had no more than 500 employees living in the US at that time. So for the loan forgiveness application, which is available on the SBA website and I'm sure available through any of your lenders at this point, there is still a remaining issue of whether or not the interest on PPP loans is forgivable. So to date, the SBA and all of its guidance has said that the interest on these loans is forgivable, but the application is not entirely clear and only includes a section for the principal amount of the loan. Additionally, there is an alternative payroll period for calculating forgiveness. So payroll periods might not line up perfectly, or utility payment periods might not line up perfectly with the 8-week period for the loan and using all of those funds. So long as the amount was incurred or paid during that time. So if you worked for a full week, but your paycheck wasn't due until the following week after the loan covered period expired, then those hours would still count for loan forgiveness. The loan forgiveness application also requires details regarding every employee's cash compensation. So you'll need to make sure that you have all of that information available when you go to apply. And again, if the employee was fired for cause, voluntarily resigned, or had a voluntary reduction in hours that was accepted by the employee and the employer, then that doesn't decrease the loan forgiveness eligibility. Importantly, going back to the FTE, or the full-time equivalent calculation, that's hours paid, not necessarily hours worked, because given the circumstances, some businesses have been paying employees to stay home. The PPP program was designed to put money in employees' pockets and help them make mortgage payments and pay for groceries and do all of the things that we would do in quote unquote normal everyday life. So long as the hours were hours paid, they would still count towards the full-time equivalent number calculation when you're applying for forgiveness. Some quick stats before we get to the questions. As of May 16th, so just a couple of days ago, the SBA has handed out over 4.3 million loans, totaling just over 573 billion. Roughly 100 billion in loans has been issued in the second round of loans. And the average loan amount is roughly $118,000. In all of those, over 25,000 loans have been approved in Maine alone, totaling over $2.2 billion. Having said all of that, things can still change. I know I've stressed that a couple of different times so far, but things are continually changing in this stimulus world that we're living in, and trying to make sure that businesses and individuals can stay afloat. Right now, there's a new bill in Congress, coined the HEROES Act, which includes provisions affecting the PPP program. Those provisions, if accepted, and there's a lot of room for change, and no guarantee that the bill would pass at this point, but might change the 8-week period to 24 weeks to spend the loan proceeds. It might reduce the 75% payroll requirement. It extends the program through the end of 2020, and it would expand the program eligibility to 501c6 organizations such as chambers of commerce, which would be very helpful, yes. So again, that's all up in the air at this point. And in fact, I read this morning that Congress might scrap the bill altogether and start a new stimulus program similar to other countries around the world. But again, it's all very up in the air, and would have to pass both the Senate and the House. And there's some disagreements there on what funds should be used or how much stimulus and when that might occur. So from there, I guess I'll open it up to questions. I think I answered most of the questions that came in before the presentation today, but I'm happy to answer any else that have come in.
Thank you, Jack. This was great. And if you're just tuning in, I'm Deb Newman with the Bangor Region Chamber of Commerce. Shelley Sund, our Director of Marketing and Events, is producing this behind the scenes. And we're speaking with Jack Bjorn from Eaton Peabody about the PPP program. A lot of updates, a lot of changes. It's interesting to see that the SBA addressed a number of concerns that were expressed from businesses early on in the program. And if you recall, this program was rolled out in, I don't know, 8 days or something crazy when COVID exploded, if you will. So like anything that's brand new, it has to be tweaked and adjusted once it gets out there into real life. So there have been some adjustments made, and certainly no doubt, Jack, more to come.
Definitely.
I like what you said about chambers of commerce, so I will share.
Fingers crossed.
Fingers crossed that chambers are 501c6 organizations, and we 501c6s do not qualify for the PPP program because oftentimes we're lumped in with larger associations and lobbying groups, and so chambers have really been advocating strongly for that support. So our fingers are crossed for that. A couple of questions that came in. It was a great presentation, by the way. One of them is related to your presentation. So employer portion of FICA is not allowed?
The employer portion of state and local taxes would not be included in the total payroll calculation when you are first doing that.
Okay, yeah. That makes sense. Now this one is a little bit of like a word problem from junior high. So get ready. I know you can handle it. This question from one of our attendees. By the way, if you have a question, all you have to do is, if you're in Zoom, post it in the Q&A, or if you're watching us on Facebook Live, in the comments. If you would prefer to be anonymous, you can just Facebook message Bangor Region Chamber of Commerce. Shelley is looking for those messages and then sharing those with us. Okay, here we go. PPP dictates 75% labor and then 25% rent utilities, okay? Is the 25%, oh, okay, I think I get it. Is it 25% on the total loan amount, or is it based on labor expenses? For example, if the PPP loan is 100K, I can spend 25,000 on utilities and 75,000 on labor. I'm short on payroll. Let's say I'm short on payroll, say 50,000. Can I still spend the 25,000 on utilities, or is the percentage based on how much labor is spent?
So that's a great question, and first time I've ever heard that question, to be honest. And what I think is the issue, although I haven't seen any guidance clarifying this, is that it's the loan total. So if you receive the $100,000 loan, you would be able to spend $25,000 on utilities and mortgage interest and that kind of thing, regardless of the amount that you'd be able to spend on payroll. Again, that's not entirely clear. So if you were only able to spend $25,000 on payroll and $25,000 on utilities, that possibly could be affected. But at this point in time, I don't think it would. I think that the $25,000 that you'd be spending on those additional expenses or non-payroll expenses would still be eligible for forgiveness.
Great. The FICA question came up again. Still not clear on the answer. Is it a federal match? Still not clear on his answer. Is FICA is federal match? I'm not clear on the question. So.
Yeah, I'm sorry if I am not understanding the question correctly, but for purposes of the payroll calculation when you are applying for the loan, I believe, excuse me, and I can double check that the FICA amount is included in that total amount. But when it comes to the employer portion of the state taxes or local taxes, that those would not be included. And there's an example in the SBA FAQs. If you give me just a second, I can direct you to that, or I can post that after. I'll just post that afterwards. That way, so long, I don't waste any time. So, and question number 16 is from the FAQs is where you would want to look.
Okay, perfect. And I agree with you. The FAQs, SBA is doing a nice job of those. Treasury Department is doing a nice job keeping those up to date. Another question, in one of your slides, you mentioned that interest other than mortgage interest is allowed for use of PPP funds. I haven't seen that on the PPP loan fund forgiveness application. Is this a new development that hasn't been posted yet? Thanks.
So as far as the application goes, there are some differences between guidance to date and what's on the application. Prior guidance has said that interest on other debt obligations prior to February 15th of this year, you could use the PPP funds for those. I also have not seen that on the application, but I expect probably in another week or so that the application will be updated as well, like other things, to account for some of these discrepancies or differences in prior guidance. I'm also sure that there will be new guidance that will come out that will affect the application as well. Right now, we're about week 6, maybe week 7 for individuals and businesses using these loan funds. So we're coming up on the early loan application period after week 7. So I'm sure the SBA is trying to fix anything that it can and adjust anything that it can shortly in the coming days. And just to clarify back on the FICA question, question 16 says that under the Act, the payroll costs are calculated on a gross basis without regard to federal taxes imposed or withheld, such as employees and employers' share of the Federal Insurance Contributions Act, so FICA. So my confusion on that, but that's the guidance that we have to date.
Question related to that, can I pay bonuses to the staff, and can bonuses be forgivable through the program?
Also a good question. I would think yes. I will say that I think that is probably the case, given that the hiring back of employees and the using of the PPP funds don't always match up perfectly in terms of dates. So if you were required to start using funds on May 1st, for example, and you weren't able to hire an employee back for a week, then you might be able to give that employee a bonus during the PPP period, the covered period, to cover the payroll of that employee for those 7 days that the dates didn't line up. Again, not entirely clear, but that would be my guess for how that would work.
You touched on something that we've had a lot of questions about, and that is, what if I have employees who don't want to return
Mm-hmm.
to work? What if I started this thing with 10 employees and now I'm down to 5 because half of them have decided not to come back for a variety of reasons? Is that payroll still forgivable?
Yes, given the guidance that we have so far, if you gave a written offer to an employee to come back and you've documented that, you hold on to that in case the SBA needs to see that later, or the IRS might need to see that later, and the employee refused, then that amount that you would have paid to that employee would still be forgivable. Not entirely clear what you might be able to use those funds on. If that, you could then go use those for other business expenses. Again, that part isn't clear right now. But in those circumstances, or in the circumstance where an employee was fired for cause, or the employee took a voluntary reduction in hours or voluntarily resigned, those would all still be eligible for forgiveness. In that first example where the employer gave an offer to bring back that employee and the employee refuses, they should be aware that that might affect, and probably will affect, their unemployment insurance amounts that they would be receiving, or eligibility overall. That's where we're at for that.
Did you ever think you'd know so much about the PPP program?
I didn't ever think that I would be reading through an 800-page act and trying to digest it and learn as much as possible in a very, very short period of time, and then also still have all of this new guidance. But I mean, as you said, the act was put forward and put through in just a matter of days. So unlike a lot of other laws that come through that may be in Congress for years in order to make sure that every little fine detail is correct, that there are a lot of developments. So being patient and understanding as that takes place is definitely important right now.
And I will say that our federal delegation is listening to businesses and listening to feedback on the PPP program, and they're taking that seriously and taking that back to Washington and making these adjustments. So if you have any questions or concerns or any recommendations, reach out to our delegation. They definitely want your feedback, or share it with us, and we'll share it with them. Question about when calculating FTEs, people use 30 hours as one FTE or 40 hours as one FTE. That's full-time equivalent. The ACA requires us to offer health insurance at 30 hours, but some of our benefits are based on full-time 36 hours.
Yeah, and that has been something that has been clarified a little, I would say, but the FTE calculation is based on 40 hours. So, for example, if you had 10 employees and 5 of them worked 40-hour weeks and the other 5 worked 20-hour weeks, then your full-time employee equivalent would be 7.5. Because you would add up the total number of hours and then the total number of employees and divide that to get the FTE equivalent number.
We have a question very specific to a bridal shop, but I could see this being a question for any business that's carrying inventory that they can't sell right now. And I don't know if there's help through PPP for this, or if there are other programs. But in this specific situation, they have dresses that customers have purchased for events that aren't happening. Is there a grant program or a way to reimburse customers for those purchases? and again, I'm sure there are other types of businesses that have inventory that they can't, and that's just expired, if you will. Does PPP allow for any of those types of expenses, or mostly utilities and payroll?
So for PPP purposes, the eligible expenses are just the payroll costs and the mortgage interest payments and the rent payments and the utility payments. There's another type of loan which existed prior to COVID-19, which is the EIDL loan, or the SBA's disaster recovery loans. And those loans can be used for interruptions in supply chains and other disruptions to businesses. So I'm not entirely sure on this wedding dress example specifically, but I will say that it would be worth looking into the EIDL loans if you don't already have one of those, to see if that might be able to help cover the cost of potential refunds to clients that might not be able to have their event or get their dress or their suit or whatever it may be. I'm sorry that I don't know more than that for the wedding industry.
And unfortunately, for that particular business, Idle is now, there was so much demand for the program that they've now, they're only allowing agricultural businesses to apply right now, because there's such a backlog of other people businesses who have applied for Idle, and they're just trying to continue to find the funding to cover the existing demand. That said, I did see something early this morning from DC that they are looking at other loan programs and perhaps more appropriations to put more money in the economic injury disaster loan program. So that may reopen again for businesses. And to your point earlier, this is a changing dynamic situation all the time. But it's also certainly worth contacting your lender.
Yeah.
Because I know the banks and the credit unions, our financial institutions are working really hard to support businesses and find ways to help. So that might be the best way to go at this point, while we wait for likely more to come.
Yeah, and I will say that, I mean, of course, there is certainly likely more to come, whether it be in the current bill that's sitting in Congress or a different one. But it is also, I think, possibly helpful to reach out to your lender, but reach out to your local congressman, or try to reach out to the SBA through your lender. The SBA has been pretty receptive to a lot of people's concerns recently, and a lot of the new guidance has come out of those concerns that have been expressed to the SBA. So if you have questions or things that you think would be helpful to you, that you might not fit into perfectly with the PPP program or the EIDL program, that it's worth reaching out to ask, and maybe there'll be some changes down the road that would allow you to seek some help financially in whatever fashion.
Absolutely, because the impacts to businesses are just so wide ranging and so diverse, depending on the type of industry you're in, that those who are making the decisions about funding and support and help really need to don't necessarily understand your particular business and how it's been impacted. So an SBA in Maine is very easy to contact, very transparent, easy to find, and I can get that information if you'd like it as well. If you have questions, you can post them here on Zoom, share them in the Q&A or in the Facebook comments. We're here to take your questions and clarify anything. Let's see, they're coming in. Well, I don't see anything. What are you hearing from businesses in terms of their experience with with the PPP? Has it been generally positive or?
In my experience, I think it has been generally positive. I know when this all started, there were some delays in trying to get the program on its feet and get the loans out the door, and that, some of these 3-day or 10-day deadlines that people have or that banks had to receive funds and whatever weren't necessarily met. I do think that the program is running a little more smoothly now. I know that some businesses are still frustrated by certain expenses that they can't make, or certain eligibility requirements that they're not meeting because of things in the program. But I do think that, considering the recent changes and ever-evolving nature of the program, that those businesses might be helped out at some point in the future. I think it's generally been positive, and things have been a little bit more smooth in operation in the last few weeks, especially since the second round has come into place, just because banks aren't as inundated with all of the applications all at once. They're coming in more slowly than they were, on the first day that things opened up.
Unmute myself. To your point earlier, when the program first came out, I think the funds were exhausted within 2 weeks.
Yeah.
Right. And huge kudos to the banks, the credit unions, the financial institutions who had to ramp up so quickly to understand the program and process your applications and get that money out to businesses. And I know they have just made a huge commitment to doing that. Mm-hmm. Then the money ran out really quickly, and there was a bit of panic around that. And then it was reappropriated, and more money was put into the PPP bucket. So there, to your point earlier, there is money there. If you haven't applied for PPP, contact your lending institution and get it started. And I also found one of the things we heard early in the program was concern from seasonal businesses around the timing of the program, because it just didn't fit round, square, peg, you know what I'm saying? Where they received the funding and then they had a certain period of time to bring everybody back for that payroll forgiveness, but that was too soon before the season had started. So that's a change that they have made to the program. Could you just talk about that again? You brought it up, but I'd like to.
Yeah, the original time frame for the payroll calculation costs was from February or March through June, and you could pick the period that you wanted, given those choices. But more recently, I think just about 2 weeks ago, the number of interim final rules is a lot at this point. So I think it was about 2 weeks ago that the SBA said that seasonal businesses could calculate the payroll cost, from May 1st of 2019 through September 15th of 2019, and any 12-week period in there. If that amount, and assuming that amount, especially for businesses in Maine, is, say, $50,000 more than the loan that you already received given the prior calculation, then you can go back to the lender and reapply for that additional amount. That's an exception to the one-time disbursement, one-time application rule for those individuals, and same goes for the partnerships. But I think that one is especially important for businesses here because it means that they'll be able to cover a substantial portion that they weren't otherwise able to cover given the new increase in funds available to them.
So I wanted to drive that point home. So if you're a seasonal business and you didn't apply for the PPP program before because it just didn't work time-wise, you want to reconsider that right now.
Yeah, definitely. And I read news articles every day about how this will affect Portland, how this will affect Bar Harbor, how this will affect Bangor. And if there's any chance that you can get another $10,000 or another $30,000 or another $100,000 from the PPP program from this new change in the seasonal business calculation, it's definitely worthwhile to do, because assuming that you use the funds properly, that's all going to be forgiven, and you can continue to pay for those employees, and the business can try to get as much revenue as it can through this time, but know that some of its expenses will be covered for some of the summer.
Yeah, and that can make a huge difference when revenue is so uncertain right now.
Definitely.
That you cover your payroll and some of your basic overhead expenses will go a long way. So this is good. This is really good, Jack. Thank you so much. I think the questions have you answered all of them. So you did a great job. I would like to invite you, if you're available, to do this again in a couple of weeks, or if there's a major change or update and you want to it's easy for us to set this up and do this, and we really appreciate your expertise. I learned a few things today that will help me as we counsel our members. Anything else that you want to be sure we clarify or restate before we wrap up?
Well, I guess first I'll just say thank you. And yes, provided there are any new major changes or there's a new law that comes out, I'd be happy to speak with the chamber again in the future, whenever that might be. One thing that I stressed the last time I did this presentation, and one thing that I'll stress again today, is that there is no prepayment penalty. And worst case scenario, provided that you in good faith applied for the loan and tried to use it properly, and weren't using it fraudulently in any case, that the loan that you're getting will just convert to a loan. And the grant portion will still be forgiven, but the remaining amount that you weren't able to use on those expenses will just be a loan at 1%, and there's no prepayment penalty. And that's the biggest stressor. So if you're trying not to incur any additional expenses that your business might not otherwise be able to afford, even a 1% loan, then pay it back as soon as you can. Pay it back as soon as you know what forgivable expenses you've been able to make. And you can start doing that now. The 7-week time period for early application for loan forgiveness opens up soon for a lot of businesses. So work with your lender, get your documents in order. Your payroll documents and other checks and expenses for utilities and that kind of thing, and start working with your lender, or at least ask them about this loan forgiveness process so that you can get to it as soon as possible, and pay back any additional expenses while you can. But hopefully this program will allow businesses at least a little breathing room for the time being, at least until we can get some more guidance in the future or some additional help from the state or federal government. I know it's certainly going to be a tough summer, and that's hard for a lot of people, and it's very challenging. But hopefully, with some of these programs, we can put people in a better position than they otherwise would have been in.
Thank you. And before we wrap up, resources. I want to mention. You mentioned the SBA FAQ. I think the Treasury Department updates. Where can businesses access that information?
So if you go to the SBA.gov website or the Treasury website, all of these resources are publicly available to them. All of the interim final rules are there, and then the FAQs right on top. And I know those are good for answering these quick questions that a lot of people have. That's where I would start. From there, ask your lender, because they're most closely working with the SBA, and they might be able to help guide through it. Any additional questions you have, or like I said earlier, work with the SBA to try to make some changes to the program that would benefit you in the future.
Sounds good. Thank you so much, Jack Bjorn, Eaton Peabody, Nate Levesque behind the scenes. Thank you, Nate, for organizing this, and Shelly Sund, who's also producing behind the scenes. Thank you, Shelly. Thanks to all of you for joining us. Shelly is recording this. There she is. Thanks, Shelly.
Hello.
So if you missed any of this, or you know somebody who would be interested in seeing this, will we be putting this up on our Facebook page?
Yes. Yep.
So we'll publish it there. And I also want to thank both of your assistants this morning. I know, Jack, you have a helper,
Yes.
a doggy in the room, and Shelley has a doggy in the room too, correct?
Yes.
Yeah.
Insists to be there. Right there. That's what I'm looking at.
It's good to bring a little humor to this at times. So again, Jack, thank you so much. We really appreciate your expertise and your time today, and you did a great job. So
thank you very much, Deb, and thank you very much, Shelley, for putting this on. And thank you to the chamber. Eaton Peabody has a great relationship with the chamber, and hopefully, if anything comes up down the road, you can reach out to us or to me, and I'd be happy to answer any questions you guys might have. So thank you very much for putting this on again today.
all right, we appreciate it. Well, thank you all for joining us, and with that, have a great holiday, hopefully a long weekend, and
Yes.
enjoy some Maine sunshine, and we'll certainly keep you posted as things develop. All right, thanks everyone.
Thank you.
Signing off.